In this video we are going to talk about top 10 stocks to invest in 2021. So before starting this video, please like this video and subscribe to our channel for future updates. There are several schools of thought when it comes to stock selection, and nothing is certain. This is why a diverse portfolio is the greatest way to limit risk while still having the opportunity to profit. However, this does not rule out the possibility of owning individual stocks. Stocks can be a terrific way to accumulate wealth if you do your homework before making your investing decisions. As the second half of 2021 progresses, a variety of scenarios may favor various sorts of stocks. If the coronavirus epidemic continues to subside, it could help both economically sensitive cyclical stocks and growth companies in specific areas, particularly those related to leisure, travel, and entertainment. If coronavirus variations or other reasons reignite the pandemic, so-called COVID stocks, such as food delivery companies and streaming services, may continue to outperform. Some analysts believe small cap and value companies are the way to go, while others believe that firms that have performed well in the past will continue to do well in the future, riding on their own momentum. Number 10. Disney, DIS. Disney is a global entertainment behemoth with a well-known brand. Because of its leisure and entertainment businesses, such as cruise lines and well-known film properties, the corporation is well positioned for the ongoing economic recovery. The firm is also benefiting from the massive popularity of its Disney Plus streaming service, which is expected to thrive whether or not the epidemic returns. On the heels of the success of its previous Marvel series, WandaVision, and The Falcon and the Winter Soldier, Disney Plus is presently riding the popularity of its newest Marvel product, Loki. The company will release potential blockbusters, Black Widow, Jungle Cruise, and Shang-Chi and the Legend of the Ten Rings, later this year. Number 9. HarleyDavidson, HOG. During the coronavirus epidemic, HarleyDavidson, like many other companies, saw a drop in travel and customer spending. After a difficult start, the company has begun to reap the benefits of its comeback, with its shares up over 28% at the halfway point of the year. Analysts expected Harley-Davidson to rebound in 2021 as consumers resumed spending, but the company's most recent earnings report, announced on April 18, 2021, was a showstopper. The company's announced earnings of $1.68 per share well outperformed Wall Street's forecasts of 90 cents per share, while revenue increased by 29.4% year-over-year. Number 8. Microsoft, MSFT. Microsoft is the largest software company in the world. If you use a personal computer, Microsoft software is almost certainly installed. Yet, with its foray into cloud computing services, which is now its major source of revenue, the corporation is truly hitting its stride. From 2011 to 2017, it was mired in the mud in terms of both stock price and earnings, but since then, earnings have doubled. Analysts predict annual earnings growth of around 12% over the next 5 years, with a median price target of $300 in the following 12 months. Number 7. Hilton HLT. Hilton Hotels suffered a significant setback in 2020, as the global epidemic virtually wiped out both business and leisure tourism. Hilton, on the other hand, is positioned to recover as the economy improves and travel returns to pre-pandemic levels. Investors have already begun to flock to the stock, which has risen 66% in the last year and 11% in 2021 alone. The business just opened 3 major properties under the Hilton, Conrad, and Crockford's brands at the brand new Resorts World International on the Las Vegas Strip, which are generating attention. Number 6. Exxonmobil XOM. If you're looking for a cyclical investment with a high dividend yield, Exxonmobil may be the best option. In 2020, America's largest oil business lost billions of dollars and saw its stock price plummet 40%, but it's rebounding quickly as the economy improves, with a year-to-date gain of almost 53%. ExxonMobil will gain from increased demand for everything from gasoline to jet fuel if the economy continues to grow. In the meantime, the corporation continues to pay an outsized dividend of 5.52% as of July 1, 2021. Despite its huge growth thus far in 2021. Number 5. Alphabet, GOOG. Alphabet, the parent firm of Google, is frequently in the headlines due to antitrust regulations and privacy concerns. While they are undoubtedly disadvantages, they demonstrate Google's enormous size and influence. Those are fantastic developments for stock investors. Google has evolved from the world's largest search engine, supplying 92% of all global search results, to a vastly diverse technology business. Nothing appears to be standing in the way of Alphabet's expansion, with stock gains of 44% year-to-date and 75.75% and 121.67%, respectively, over the last year and 3 years. Alphabet owns everything from Gmail and Pixel phones to Google Cloud and self-driving cars, in addition to search. Number 4. Zoom Video Communications, ZM. Zoom Video Communications was an undeniable favorite of the year 2020. People all over the world used video conferencing to work and stay in touch with friends and family as a result of the global epidemic, which compelled workers to stay at home and halted worldwide travel. Zoom Video Communications, as a result, was the fastest growing firm in 2020, with earnings increasing by nearly 5,000%. Due to the fact that earnings drive stock prices, Zoom's stock price soared by more than 400%. Number 3. Wayfair, W. Wayfair is an online home products business. Based on a confluence of developments, the corporation had a banner 2020. Stay-at-home orders and store closures have resulted in a significant increase in internet buying, with Wayfair being one of the biggest beneficiaries. As of December 31, 2020, Wayfair has 31.2 million active customers, up 54% from the previous year. In the first quarter of 2021, the company added another 2 million active subscribers, bringing the total to 8 million. Number 2. Apple, AAPL. With good cause, Apple is the most valuable firm on the planet. Its products are cutting-edge and ubiquitous, and it has a worldwide fan base that borders on fanaticism. In recent years, the stock has continuously been a home run for investors, with returns of 50.80%, 192.11%, and 472.61% over 1, 3, and 5 years, respectively. However, the company has only gained 3.45% year-to-date, suggesting that it could be a good entry position for long-term investors. Number 1. PNC Financial, PNC. PNC Bank, like many other financial services companies, had a rocky start in 2020. The pandemic spread reduced lending to a bare minimum, and when combined with historically low interest rates, banking's profit engine all but vanished. In the second part of 2020, things started to look up for banks like PNC, and those trends persisted in early 2021. The stock has increased by 86.47% in the last year and by 28.69% in the first half of 2020. Increased economic activity in the second half of 2021, as well as rising long-term interest rates, might help the bank maintain earnings. What do you think of our video? Let me know in the comment section below. If you enjoyed this video and want to hear from me again, be sure to hit that subscribe button before you go. Thanks for watching.